What if I told you that one single move could completely change how homes are bought and sold in America? Opendoor just made headlines again. The stock is climbing, and social media is exploding with rumors about what's really going on behind the scenes. Some traders think this could be the start of something big, maybe even the future of real estate, while others believe it's just hype before earnings. But the truth is a little more complicated. So grab your coffee, because we're diving deep into Opendoor. What's driving the stock, who's really buying, and whether this momentum can actually last. Before we start, quick disclaimer. This video is for informational and educational purposes only. It's not financial advice. Always do your own research before making any investment decisions. Alright, so Opendoor stock is having a pretty interesting run lately. The price jumped more than 6% today, trading between $7.36 and $8.02. But here's the catch. Even though the price is up, the volume isn't that crazy. About 91 million shares traded, which sounds like a lot, but the average volume sits around 160 million. That tells us retail investors are watching, but the big money hasn't gone all in yet. So, what's behind the move? There are two big reasons. First, the technical setup looks strong. And second, the company's connection with Robinhood is creating a lot of buzz. Now, if you haven't heard, Opendoor recently announced a collaboration with Robinhood. Details are limited, but investors think this could involve tokenized real estate, digital assets backed by real property. It's something Robinhood has been exploring for a while, and now, seeing Opendoor in the picture, traders are getting excited. Even on social media, you can see the engagement between Robinhood's CEO Vlad Tenev and Opendoor's leadership. They're liking, replying, hinting at something bigger. And in the market, speculation is enough to create serious momentum. That's what we're seeing today. Hype mixing with technical signals. From a technical perspective, Opendoor's chart is showing what traders love to see: a clean V-shaped recovery. The stock bounced off its 50-day moving average not once, but twice. First around October 22nd, and again this week. That level is acting as strong support, and every time it touches it, buyers step in. When a stock does that twice in a row, it often signals a short-term reversal. And now, momentum is building right before earnings week. Now let's talk about something that's usually ignored: the short interest. This part tells you what's really happening behind the scenes. Shorts have been increasing their positions, adding about 1.6 million shares, which now makes up around 22% of the entire float. That's 157 million shares being shorted, a massive number. But here's what's surprising. The cost to borrow those shares is just 0.8% annually. That's incredibly low. Normally, when shorts feel confident that a stock is overvalued, they go all in. They'll double or triple their positions. But this time, they're not. That tells me that even though short interest is high, there's hesitation. They're nervous, because something in this setup doesn't fit the typical bearish pattern. Meanwhile, options traders are showing a different story. There's about $15 million in call volume and $6.7 million in puts. More than half of the options being traded, around 52%, are bullish. That's a strong sign that sentiment is tilting toward the upside. The net premium in calls is up by about 3.2 million, showing that more traders are betting on green candles than red ones. Today's consensus target from bulls sits around $8 flat, and if the stock closes above that, it confirms the technical recovery. Bears, on the other hand, are expecting a close somewhere between $7.50 and $8 even, but that's a narrow range. And if we look deeper at the market data, big money seems to be stepping in quietly. There are dark pool transactions worth $2.3 million today and several smaller institutional buys. Yes, there's been some selling, but overall, most of these large trades are on the buy side. That suggests hedge funds might be positioning ahead of earnings, and when that happens, retail traders usually catch on later. At this moment, Opendoor stock is sitting around $7.87, which means it's trading above its pivot point of $7.65. That's another positive signal, because in yesterday's session, analysts said the stock needed to close above that level to maintain momentum. And that's exactly what happened. If this momentum continues, we could see the price testing resistance near $10.23 soon. But the key factor will be earnings. The implied move based on options pricing is about 15%. That's roughly a $1 swing in either direction. So yes, expect volatility. Wall Street will be watching for three things when Opendoor reports. First, progress toward profitability and cash flow. Second, updates about partnerships and how technology is helping them scale. And third, any outlook on the housing market as mortgage rates start to shift again. If they deliver positive numbers or upbeat guidance, it could send the stock higher fast. Looking at indicators, the stochastic RSI is around 58. That's neutral territory. So if the stock climbs to 850 or higher, it might start to look overbought, but that's not necessarily bad. Ahead of earnings, that kind of FOMO rally is pretty common. What usually follows is a bit of consolidation before the next breakout. What's really fascinating is how much retail and institutional sentiment has changed since September. Back then, shorts were far more aggressive. Now they're more cautious. Hedge funds are testing the waters, and the trading volume patterns show they're not completely out of the game. It's a quiet tug-of-war between the bulls and bears, and next week's earnings will likely decide who wins. So here's the bottom line. Opendoor's setup looks strong, social media buzz is keeping attention high, and technical support is holding steady. But at the same time, volatility is guaranteed. This stock can move fast, and while the trend looks bullish short-term, a weak earnings report could flip that sentiment overnight. Investors should keep a close eye on updates over the weekend, especially any analyst ratings that drop. Back in August, there was a bullish upgrade that took the price target from $2.50 to $4, and moves like that can shift market momentum instantly. If more upgrades come, you might see the stock pushing back toward double digits quickly. So what do you think? Is Opendoor gearing up for a real breakout, or are we seeing one last rally before a correction? Drop your thoughts in the comments, and let's see what the community thinks. Either way, it's clear this stock will be on everyone's radar as we move into earnings week. Thanks for watching,